Welcome to lecture 5. In the previous lecture, we talked about resets and order blocks as well as order flow. In this lecture, we are going to be talking about the EMA simplification theory, which is basically exponential moving average theory. That is going to be using the indicators that we defined earlier on. So basically, what are moving averages? What are exponential moving averages? So exponential moving averages are basically indicators that plots the average of closing candles over a particular set period. So moving averages, when used in appropriate way, that is in the context of the market maker method, can give one, a true reading of the market direction, a reading of market momentum, entry and exit signals, moving support and resistance points, as well as targets for a take profit. So in this case, we are going to clarify more on using them as moving support and resistances. So the moving averages that we use and their color codes involves 5 types of indicators. These are the period 5, we usually put it in yellow on our charts, period 13 in red, period 50 in light blue, period 200 in white, and period 800 in dark blue. So the EMA simplification theory states that whenever a lower period EMA crosses a higher period EMA, price pulls back to the higher period EMA after a cycle has completed. So what do we mean by this? We defined levels in our previous lectures. After having 3 levels of drop like that, we usually have 2 EMAs crossing over above all other EMAs at this point, right? If we see this particular EMA crossover, we will expect to see the market coming back to the higher period EMA like that and probably issue a reset. So this holds in all time frames. If it happens on M15, we'll actually have a reset on the higher time frame like that. This concept forms the basis of resets, and as we defined resets, we said resets are cycle restarts and occurs at the 200, 800 or order block. So in this case, we usually have 50 and 200 EMA crossover after 3 levels have been completed. So with this case, we'll see the market actually following up to retest the higher period EMA like what the theory says. So an example of what we are saying if we see a 13 crossing a 50 EMA on the H1 time frame, we expect to see price come back to the 50 EMA. So usually this kind of crossover will occur after level 1 flow. So if we see a 1350 EMA crossing each other, we expect to see the price come back to the 50 and give us a bounce to continue with our flow. Then example 2, if we see a 200 crossing an 800 on the H4 time frame, we expect to see price to come back to the 800 EMA. So whenever we see 2 EMAs crossing over, we will actually anticipate to see the market coming back to retest those zones. However, someone might have a question that what if we see a 50 EMA crossing an 800 EMA? Can we respect such kind of a crossover? No, that is the answer. We do not respect any crossover that skips any EMA. So 513 are valid, 1350 are valid, 50 200 are valid, 800 200 800 are valid, not 13 200 or 13 800. We do not skip any crossover in between those EMAs. So what we are basically trying to illustrate here is after 3 levels of drop has been issued, level 1, level 2, and level 3. After the cycle has been completed, we expect to see the market to come back to the higher period like that. So still on that case, we would like to define another concept on how to count levels using EMAs. So we actually defined levels and said in one higher time frame level, we usually expect 3 lower time frame levels. So with that, if we see an H4 time frame moving like this is an H4 time frame going up, we would expect to see 3 levels on the H1 time frame, building 1 level of the H4 time frame like that. This point being this one, and this point being this one. And these are called resets, which are basically cycle restarts. So this is H1 time frame, and this is H4 time frame. So in this case, this becomes the first cycle, second cycle, and third cycle. In the first cycle of the market, we expect to see a 1350 EMA crossover for level 1, a 50-200 EMA crossover for level 2, and then a bounce of the market on the 13 or 50 for a level 3 floor. Then we have our reset on the 200 EMA. Then after that, we expect to see level 1 being given with a 1350 EMA crossover, then level 2 starting as a bounce on the 13 or 50 EMA, then level 3 starting also as a bounce on the 13 or 50 EMA. Then we have another reset on the 200 EMA again. Then from there, level 1 will always give us a 1350 EMA crossover. If you see yourself validating any level 1 without a 1350 EMA crossover, you are probably doing something wrong. Then level 2 will initiate as a bounce on the 50 EMA or 13 EMA, as well as level 3 like that. So basically, that is how it goes with counting levels using EMAs. I will illustrate that on the charts. So let's go over the charts to see how this is done. So this is USD against CAD. We are not going to go back to the higher time frames like the H1 and so forth, but we are going to just start at this point. So in this case, we are going to count levels from this low on this H1 time frame, and we have defined that we expect to see the market giving us, the market should give us a 1350. In this case, my 13 is in red, my 50 in blue for level 1. So we had a level 1 flow. After that level 1 flow, we had level 2 flow where we had a 50-200 EMA crossover during this level 2 flow. Then we had the last level as a bounce on the 13 in red that came up like that. So we had 3 levels of rise. Then the next thing was to have a reset, and the reset occurred on the 200 EMA. Why? Because the EMA theory states that whenever a cycle is completed and there is a crossover, the market approaches the higher time frame, sorry, the higher period EMA. So this, in this case, it actually coincided as well with the order block that was issued at this zone. This order block, which is the last red candle that was issued at this point, and the market resetted. Then after that, this became cycle 2. And in cycle 2, we have said the market will actually give us a 1350 EMA crossover for level 1, which is this one, then a bounce on the 50 EMA, and then a bounce on the 50 or 13 EMA. So in this case, we had level 1 and then level 2, which actually gave us a bounce on the 50 EMA, and then level 3. We reached another peak, and from there, what do we expect? A reset, since we still don't have a completed cycle. Then the reset, where did it occur? We can see now that there was now a 200 800 EMA crossover that was issued at this point. So what happened? This now was manipulation, but as you can see, they were pinning the same point. So what do we have right now on USD CAD? The next thing that we can see is we can see a 1350 EMA crossover, implying that we are still in level 1 and we are expecting a pullback and then a continuation going up. So probably this kind of rise is actually a news-driven rise. Right now, there is geopolitical uncertainties that are going on, Russia against Ukraine attacks. So we would actually wait to see what will happen in the markets. So that was the first example on how to use EMAs in our trading. Then another example is on Euro against CHF. In this case, we are going to count levels using these EMAs as well. So the first thing that we can see is we had a floor where we had a 1350 EMA crossover. Then another floor whereby a 250 EMA crossed over during that particular impulsive drop, like that. Then we had the last drop at this zone, which actually started as a bounce on the 13 EMA in this case. So level 1, level 2, level 3. What are we now expecting after 3 levels of drop? A reset. Where do we expect a reset? 800, 200 or order block. In this case, a setup was issued on the 200 EMA, meaning that this was a valid reset. Then after that reset, level 1 should always give us a 1350 EMA crossover like this. So what happened later? We can see some consolidation like that. Then after that, the market bounced on the 50 EMA to show us initiation of level 2, since it's now a second cycle, right? This is now a second cycle. Then what happened next? The market bounced on the 50 EMA again to give us a very long level 3 like that, right? What's next? The market gave us a reset. Right now, it actually did the reset at the order block, right? Which is the last green candle before this shift. So the market actually came back to retest that order block as well as the higher period EMA, which is the 200 EMA. And in this case, we can see that 800 and 200 are actually crossing. So with that in mind, if we go on the H4 time frame, we can see that what can we see from, actually let's go back to the H1 time frame. We can see that so far we have been issued level 1 flow, right, which actually originated from that zone going down, right? So we don't know yet, but this bounce is actually a sign that probably we are now starting level 2 like that. So if we go on the H4 time frame, we can see that the market has given us 1 H4 level, 2 H4 level, 3 H4 level, and after 3 levels would say the market has completed the H4 cycle, and we are now expecting to see it pull back to the higher period EMA. In this case, the 200 EMA would have flowed, probably it would have flowed probably to these zones. It will be around these zones. So after completion of the cycle, we would see the H4 time frame giving us a reset and continue like that. So that was it with the EMA simplification. You need to practice as well to actually understand it. As always, practice makes perfect, and do not hesitate to ask questions if you have any. So in our next lecture, we are going to be talking about the sacred market pattern, the two types of trades, the entry criteria, and the entry confirmations and exits. Thank you. See you on the next one.